So there's been a lot of talk for, probably the last 40 years about what would happen if Canadian real estate or Vancouver real estate were to actually crash. So what I think would actually happen if this were to happen is, well, the first thing we would need is forced selling. So we need a bunch of people who can't afford their mortgage anymore to then dump properties, or the bank to take back ownership of those properties and then dump them onto the market. So let's just say this happens. Well, where are all of those homeowners going to go after they have to sell their home? Some of these homes will be purchased by end users, which is, people looking to move into those homes. And then the other portion of those homes will be purchased by investors. And after these people sell their homes, they are then going to rent. So we'll have everyone who's selling a home or for selling a home is now a renter, meaning the rental pool increases, yet all of the homes that they lived in, only a certain portion of those will return back to the rental pool because a portion of those homes will be bought by end users, meaning we have net more renters and net less homes for rent in comparison to the rental pool. So this is pretty much what happened in 2008 in the United States, which was basically the global financial crisis, the worst real estate crash of all time, pretty much. And if you look at this chart, you'll see from 2005 to 2010, rents continued to go up despite the fact that we were in a full-blown crisis, one of the worst recessions ever. The trajectory of rental rates didn't even skip a beat. And what will likely happen is, yes, prices in the resale market would come down, which isn't even a guarantee, by the way. Like, even if a bunch of people force sell, if there's demand there to absorb that new inventory, prices don't necessarily have to come down. But in this scenario, the market's crashing, so let's just say prices come down. Whether it be super quick or, happen gradually over the course of, a few years, because of the increased demand for rentals and less homes available for rent after this scenario happens, rental rates will start getting pushed up faster. The trajectory will steepen, most likely. And then what will happen is eventually the rental rates will go up to a point where it starts to justify the purchase price for investors. Like, it doesn't matter if a home goes from $1 million to $2 million. If the home is still cash flow positive at $2 million, it makes complete sense for an investor to purchase that home, regardless of what the purchase price is. And then because it makes sense for investors to buy real estate again, essentially, demand for homes will increase, and this will start pushing up the prices of real estate. So rental rates will go up, and then likely prices of real estate will go up. And then because of all the new investors coming into the market and buying investment property, that will at least slow the trajectory of rental rates at that time. But by then, rental rates could be another 20-30% higher. Now, another thing that would probably happen if the market were to crash is we would see basically the government and the Bank of Canada pull out all the stops to correct course from where we're going. So they would likely cut interest rates, inject a bunch of money into the economy. They would, possibly get rid of the stress test or lessen how much you have to be stress tested. They would increase amortizations. They would pull out every tool possible to try to stop that falling knife. And what I think would happen, and again, you are more than welcome to disagree with me, and this prediction means absolutely nothing, because what I think does not mean that has to happen. My prediction is just as good as a 3-year-old's, but what I think would probably happen is we would get a V correction. Prices would come down, they'd use all their tools down here, boom, prices would come right back up to some type of mean pricing. Meaning we'd likely retrace a lot of the gains that we lose pretty quickly, in my opinion. So here's the thing, back to this rental rate discussion. As long as there is a gap between what you pay on a mortgage and what you can rent that same house for, there will be room for rental rates to increase. Because when this condition exists, you have a lot less investors picking up investment property, because who the hell wants to use $1,500 a month on a 2-bedroom condo? Like, in Langley, you can rent a 2-bedroom for $2,600 a month. But if you buy that 2-bedroom, the mortgage is like $3,600. Then you have strata, property tax, everything else. You end up losing over $1,500 a month in negative cash flow buying a 2-bedroom in Langley as opposed to renting that 2-bedroom. So as long as there's that massive gap, what ends up happening is you have way less investors buying rental units up here, meaning less supply coming to the market, more people immigrating here. There's huge demand for rentals right now and not enough people supplying them to the market, so you'll likely see rental rates increasing to a point where it starts becoming a lot more justifiable for investors to start purchasing rentals, and that's what will slow the trajectory of rental rate growth. So rents, even the way they are right now, regardless of a crash or whatever, I personally think have a long way to go, before we start getting some relief. Anyways, if you guys made it to the end of this video, don't forget to subscribe, like the video if you liked it. And if you like this video, you're probably gonna like this one, so I suggest that you watch this one. Appreciate you guys. I'm that Agent Kelly. I'm making moves to move you. Peace.